All right. 3-step trading strategy, so simple that you'll be saying, why didn't I think of it? Right? 3 steps, that's it. Very simple. Step 1, determine what I call the master direction. You know what the master direction is? I already showed you. That's the master direction. When I start trading with that in mind. There's a 75 to 80% chance that the market will be going in this direction. That's my starting point, right? So let's go back to the daily chart. This is very recent. Euro dollar, everybody should know that. If I look at the very last bar, it's green. So I would have been wrong today, but it's okay. I might be wrong tomorrow, but guess what? I'll catch these and that. Right? So, but that's just the starting point. Now, even if the market goes against me, if I'm wrong, doesn't necessarily mean I will be in a bad trade. I may just not get in if the other 3 steps don't fall in. Right? Alrighty, so now what do we see? Green bar. We're going to assume the market's going to go up, provided that we get the right setup, which will come from step 2 and step 3. Now, similarly, we can look at a 240. Look at that. Up. Based on my last, market's going up. So this is on a smaller time frame. Next, we will determine the trend. Now, remember, that was the master direction. I have my own terminology. Invented it along the way. A lot of words or a lot of expressions you never heard before, but we'll try to get through it. All right, step number 2. We're almost halfway there. Determine the trend. And the trend we determine very simply on a 60 or 30 minute, or depending, if you are a very, very long-term trader, you might need to use 120-minute chart to determine the trend. But it doesn't matter which chart you use. There's only 3 things you need to consider when determining the trend. It's the slope of the 20-period exponential moving average. You can use simple if you have a problem with exponential. It's not really all that important. It's the last Heikin-Ashi bar, which both must match the master direction. So if our master direction, our prediction, our predictor was up, then we're looking for a trend that goes up. So in other words, Heikin-Ashi is green, and the slope of the 20-period EMA is pointing up. And the price, I don't always necessarily pay attention to this, but you, as the beginners of this strategy, I recommend that you do. The price relation to EMA, if the price is above the exponential moving average, we're going up. If it's below, we're going down. So here we go. You're doing this just on Forex, right? You can do this trading anything, not options. Why would you trade options in the first place? That's the worst thing you can do. I mean, first of all, you've got a huge spread, extremely high cost of entry, extreme lack of volatility. You lose money even if you're right because you've got time decay. Why in the world? Who did you buy your training program from? Somebody charged you $3,000. I know it all sounds good. You limit your loss. You only lose what you put in. Well, if you put in your whole account, you lose it all. Well, in a market like, what do you sell, puts? Well, of course it loses time. But if the market breaks away from you, you're holding that put or that call, and you're kind of up a shit stream without a paddle. And it's so tough to get out of a bad trade. You got no liquidity. I don't care what options you're trading. I mean, you'll get into an option and 1/3 of the value will be your commission and spread. Why would you want to do that when you've got all these other instruments you can trade? If you're looking for the leverage, trade futures. You can get in and out just like that. Boom. Now, what if the market goes low against you? I mean, you're 50% of what you put in down before you even blink. Now, don't get me wrong. There is a place for options in the financial markets. If you want to, I mean, it's a derivative. If you want to protect a long position or a short position, I understand that. But don't think of all these butterflies and condors and all this bullshit. The more legs your option has, the more you're going to lose. Long term, always will. I'm sorry, this is an options group. I'm sorry, I shouldn't have said that. I take that back. I take that back. If you want to protect your equity position, yeah, by all means. If the volatility is down, you can buy cheap protection. But not if you're a trader, if you're an investor. But I'll tell you this, 10 years ago, if you had invested, I guess in this market, you would still be down as an investor, wouldn't you? Or pretty close to it. Yeah. So anyway, here we go. This is how we determine the trend. This is a 60-minute chart. We'll look at the very end. What's the slope of the moving average? Up. What is the last candle? Green or red? Green. That means up. Where's the price? Up, below, or above the moving average? All right. So, slope, color, price. Up. Simple. Similarly, we can do that with a 30-minute, depending on how fast or slow of a trader you are. You see that? You see why it's up? Slope, color, price. So now we've established the trend. We have the master direction. They're all synchronized. Next step. That's our trigger. We need to get in. And what I used to use a short time frame, but I discovered it wasn't good. Now I only use a range chart or a Renko chart. Again, Renko and range charts are not time sensitive. Who is familiar with range charts? Renko charts. Not many. Well, this is your homework, to study up on Renko charts and range charts. Basically, it is a Renko chart or a range chart. They're very similar. They will only paint a bar when the market moved the predetermined number of ticks or points in the market. If the market is flat, and let's just say that you're looking at a 10-tick Renko chart or 10-tick range chart, the chart will not paint a new bar until the market physically moved 10 ticks up or down, either direction. If the market is flat, it will not paint a new bar. It is not time sensitive. Now, why do I want a chart for my entry? Why do I want a chart that is not time sensitive? Because I don't care about time. All I care is about price, the movement of the market. That's what's important to me. Let's just say the market is not moving. A 5-minute chart or a 1-minute chart might be giving me green candles, red candles, green candles, and see, I'm very visual, you know, and I don't need that. There's people that tell me that they trade off of a 1-minute chart. And I'm like, you gotta be kidding me. That's insanity. So I only wait for the move. If the market doesn't move, I'm not getting in, period. All right? So I'm going to look for an entry, and I base my entry on the color of the last Heikin-Ashi range or Renko bar. And step 2, I might want to confirm it with my, remember, the only other technical indicator that I will use, most likely MACD or CCI. So here's what we're looking at. This is a Euro-USD 10-tick range chart. Each one of these bars is 10 ticks, 10 pips. Now, this might be an hour, might be 10 seconds. I don't know, and I don't care. All I want is the movement in the direction of my predictor, master direction, and my, what? What was number 2? My trend. All 3 have to be synchronized. All 3 in one direction. So if I'm assuming that throughout this entire chart, we had the uptrend on both step number 1 and step number 2, right? So this would be my first entry. This would be another entry. See, I can confirm it with my indicator. Then I get into this one. My next one would be here. Next one here. So now basically these are my up. Here's an important thing. In my trading strategy, let's just say that normally you would get into a trade with 1 contract, if that's your normal trade. Don't do it anymore. Divide it by 5 and enter with 1/5 of the position size you would normally take. I'll explain to you why in just a little bit, why that is important. Because that's part of trade management and also trade recovery. If you're trading a $100,000 account and trading euro-dollar, and normally you would want to get in with 1 full lot or 10 mini lots, do it with 2. 2 mini lots. Right? Now, this is 5-tick Renko chart. Same thing, euro-dollar, same kind of a time frame. This is slightly different, but also I cheat and I combine the Renko with Heikin-Ashi. I kind of marry them together. And that paints kind of nicely like that. And here we've got 4 entries as well. Again, only open the trade with 1/5 of the position size that you would normally take. I'll explain to you why that's important in just a little bit. So, summary. You've got master direction. Is the coin toss? Not really, but same principle. Statistics of where we think the market's going to go. Then trend. Master direction, trend have to be in the same direction. Up or down. So here's the thing. When the market opens up and it's going down against my master direction, my strategy won't even allow me to get into a trade because they're not synchronized. They have to be going in the same direction. So this will prevent me from entering bad trades. Now, and my entry trigger is based off of a non-time sensitive chart. Range. You don't want to be entering off of a time chart because you'll get whipsawed. You know what that term means. You'll get in and then you'll realize, oops. And only start. Your first trade is only 1/5 of the position that you would normally take. Now, this is how I would have the setup. Here's my master direction. Here's my trend. Here's my entry with a confirmation indicator. You need to keep in mind is that the strategy can never change. You don't want to ever deviate from it. Every system has to be repeatable 100% of the time the same way over and over again, or else it's chaos. You have to have rules and always stick to them. And not every trade will work out. But if you stick to the rules, you'll know how to get out of the bad trades. All right. Is that pretty simple? Thank you. So, exit rules. Now you know how to get in. Only open your first trade in the direction of the master direction, the direction of the trend, on an entry where all three are synchronized in the same direction. Never speculate that it might turn, it might not turn. If you speculate the market will sooner or later go against you, it will cost you pain. All right, so how do we get out? Now we're in a trade, how do we get out? Take profit, or when in profit, take profit whenever range or Renko bar, which is your entry, changes color. Then re-enter only on new entry conditions, on the new setup. Remember what those bars do? They have a tendency to repeat themselves. So when a bar changes, why risk it that your profitable trade will go into a loss? Or you lose, you don't want to leave money on the table. Remember this, nobody has ever gone broke taking profit.
That isn't true.
Well, because they don't know how to manage their losing trades. If I can teach you how not to have a losing trade, if you at least break even, worst case, break even on your losing trades, then every time you take profit, that's profit, isn't it? That's the way we work. All right, so let's look at it. Going back to the 5-tick Renko chart, we entered here, first bar, we're out. We're in profit, we're out. That's it. Wait for the next signal. Here. Confirmation. Here. Red bar. We're out. Next signal. Well, comes right after, right here. Whew, that's a good one. First bar, we're out. Something you need to understand with Heikin-Ashi bars. Usually when the new bar paints, by the time the first bar is over, or previous bar is over, the new bar already starts painting in the direction that it wants to go. It's not, Heikin Ashi bars are not like candlesticks that they start from where the price ended. Heikin Ashis give you kind of a prediction of the next bar. So by the time this doji is finished, I would be about 95% certain that you already have half of a green bar that will automatically jump in and paint. And I could explain to you how the Heikin Ashi bars are calculated. Like the candles are basically, Japanese candle is high, low. Let's just say that this is a dark bar, open and close. Heikin Ashis are calculated differently. They are much smoother. They take averages. So the open of a Heikin Ashi is open and close, open plus close divided by 2. So the Heikin Ashi bar will always open in the middle of the previous bar. And then the close of that bar will be open plus close plus high plus low divided by 4. Again, it's more of an average of what's happening within that within the bar as opposed to just exact movement. I don't really care about noise. I want to know which direction. So the Heikin Ashi bar would already open over here, and immediately, because it calculated this, and immediately it has open, close, high, and so immediately it starts painting whichever direction it wants to go. That's the exit rules. Now, exit rules continue. Now, this is when we're in profit. Any idiot can take profit. But now the most important part of it all is what if we don't have a profit?